We've recently had a few queries from people who want to take a lump sum out of their pension. The first thing I would say is, if you are thinking of doing that, please talk to your accountant, because what many people don't realise is it's taxable at the marginal rate of tax. So if you've already got quite a lot of income in that year, you're going to be paying maybe tax at 40%, which really ruins the point of the tax relief you had when you paid into the scheme. But assuming it's a good idea, you can take a lump sum out. And some of it will be tax-free actually, depending on the rules of the pension scheme. But what we do find is that the pension companies apply tax codes to this money. And it's called an emergency tax code, which means you don't get much tax relief. You end up paying a lot of tax on the lump sum, mostly at 40%. Now, if you needed the pension lump sum, you possibly could do with that tax refund coming back quickly if you've overpaid tax. Now, the traditional way of doing it is to do your tax return. You have to wait a while to get your tax back then, but there's a form called a P55 that you can fill in, and in theory, you should be able to get a tax refund back that you're due, depending what your other income is, supposedly within 30 days. We've never actually done a form for anybody yet. We would be happy to do it. Accountants would be happy to fill in a P55. It's a relatively new rule, so it's not come up. That form's not come to us yet, but it is there, and it could be very useful to people. So to summarise, one, please talk to an accountant before you take any lump sum out of pension, and two, if you need the refund tax refund quickly, do consider the form P55. It might be quicker than your tax return.